Hi there guys, this is Chris Coney speaking and welcome back to the Weiss Crypto Sunday Special. My guest today is Alex Benfield. Alex, welcome back to the Sunday Special, mate.
Thanks again for having me.
Thank you for being here, sir. So today we're going to be discussing Bitcoin, technology, and deflation and inflation at the same time. So the reason I wanted to talk about this is here's my overall thesis. It's not a case that people tend to think in these general terms, like, are we in an inflationary economy or a deflationary economy? Well, at the end of the day, that's a balance of all the various forces. So my view is that at any given time, the entire economic system is under simultaneous pressure from inflation and deflation. So whatever that balance becomes, if there's more deflation than inflation, of course, we get a general deflationary curve, and if it's the other way around, we get a general inflationary curve. And the general assumption right now seems to be that the balance is in inflationary direction, but there's still deflationary forces at work, and we know Bitcoin is deflationary. So can you start us off there in the Bitcoin realm? So Bitcoin is known to be deflationary, right? Why is that?
Yeah, I've never heard of that balance between inflation and deflation, but I like it. I think
We can get into that. We'll get into that in a minute.
yeah, it's true. So Bitcoin is deflationary, which is obviously an interesting trait about it, considering that most currencies that we know have inflationary supply. Supply grows, and the currency is devalued over time. That's typically what we've seen, what we're used to. So Bitcoin is a fixed supply. That's why it's not an inflationary currency. So that in and of itself is already pretty interesting. The fact that the supply of Bitcoin is capped, it's never going to get devalued over time.
Mm-hmm.
That is interesting in and of itself, but Bitcoin's actually deflationary on top of that. So not only does Bitcoin have a supply cap of 21 million coins that will ever be issued or mined, but coins are also lost over time. Mm-hmm. So the actual supply of Bitcoin technically is decreasing over time as coins get lost. And it's estimated by Coinmetrics that the total amount of coins that have already been lost to date is somewhere around the realm of 3.9 million.
Mm-hmm.
So out of Bitcoin's issued, I think, somewhere around 19 million of the 21 million coins. Yeah. So if you take 3.9 million out of that, you've now dragged that number down to a little over 15 million Bitcoins in existence, which is extremely interesting.
It is interesting
that many coins have already been lost. There's more coins that have been lost than we will ever mine moving forward.
Yeah, exactly.
We only have about 2 million coins left to mine.
That is a good one. And that'll continue, right? The every coin that's lost is never recovered. And because there's a 21 million limit,
gone.
The actual total circulating supply of Bitcoin will keep going down as they get lost.
Right. And we'll never see another 3.9 million coins get lost moving forward. Most of those coins, a big chunk of them, I believe, are Satoshi coins, and early miners who would lose them on old computer servers, or back when the block reward was drastically higher than it is now. Mm-hmm. We're never going to see another 3.9 million coins get lost in the future. But that being said, we'll see small wallets. People will lose accounts or access to small wallets. We can assume that trend will continue on in the future. So the supply will probably keep shrinking at a shrinking rate. But yeah, that's a deflationary currency right there. It's something that most people aren't used to. So as the supply decreases over time, you can expect the value of Bitcoin, the value of that currency, to slowly appreciate as well.
Sure, because if everyone's
barring no other factors, just that shrinking supply and a constant demand would lead the price of Bitcoin to appreciate in the future.
Well, what's interesting is if people are doing their math based on 21 million coin supply, we already know it's actually more scarce than that. That's the first big aha from this conversation, I suppose, is that the the total supply of Bitcoin right now isn't 19 million. That's how many have been mined, but the maximum circulating supply is 15 million at best. And the question is, maybe this metric will come out in time. What is that rate of coin loss, right? So you could even add that into the deflationary supply. I just drew a little sort of like triangle thing on my notepad here, is that people could say that Bitcoin is inflationary up until the point it reaches its 21 million, final coin mined, and then from then, of course, the newly created currency stops, and then that's it. Then, if the economy expands and more goods and services and GDP expands, well, that would be against a fixed supply, and that's where the deflationary aspect comes in. So
yes.
I would have mentioned that which direction the overall economy goes depends on the balance of inflation and deflation. But deflation is generally seen as how a free market economy should go if progress were being made. So what I mean by that is, so progress is generally, like in the world of products and technology in particular, is that products should get better over time as innovation, research, breakthroughs are done. They should get cheaper to make, more robust, higher performance, and so on, right? And computer hardware and computer software is a good example of that. That 1 megabyte of storage used to be $1 million, right? And now 1 megabyte is a fraction of a penny. So that's deflationary. That same 1 megabyte of storage has gone down dramatically in price. However, on the opposite side of that ledger is, well, 1 megabyte isn't that useful anymore, because then also technological innovation has made photos super high resolution. So most photos are bigger than 3 or 4 megabytes on an iPhone. So there's the two sides of that ledger going on there, right? I suppose where if Bitcoin was, say, the reserve currency of the world, right, and you had that 21 million coins have been mined, and the amount of goods and services in circulation continue to rise, I've just made this point, then you'd have to, the price of those goods would have to go down. Is that right? This is what I'm trying to get my head around it myself right now. That's generally how a deflationary economy is spoken of, that prices go down, right, because they get cheaper to make and better. So what would happen? I guess I don't have the answer to this question. I have to leave it rhetorical. What would happen if Bitcoin were the world reserve currency and we had mined 21 million coins and the economy continued to expand in terms of production, productivity, and GDP? That is actually a question I don't have the answer to. Do you?
No, I don't have a quick fire answer to that question.
That's one for me to go. Maybe Juan will know that one. I'll ask him about that one. That is a question I actually genuinely do not know the answer to. That's one I'd have to think about some more. So, one other observation.
There's a lot of assumptions to get to the point where we could answer that question, though.
Yeah, I suppose so. Well, yeah, I started with the premise Bitcoin is the world reserve currency and economic expansion continues and so on.
There's a lot of things we have to answer. Just what would happen if Bitcoin were the world's reserve currency?
Right.
So,
okay. So let's expand out to the bigger economic system. So we know for the last however many 4 decades since we went off the gold standard in terms of the US dollar, the US dollar as a currency has been inflationary. So the total currency supply has been increasing steadily. You can look at it actually on TradingView now. They've got a price feed for M2 money stock, and it's just it's like on a steep incline. And then 2020 comes, and all the COVID relief stimulus comes, and it just takes a massive jump up. So it's been inflationary over time anyway, just as governments finance their deficits and so on. They've been printing money to finance those things, so that's been creating inflationary pressure. But at the same time, we know that technology is advancing and stuff's getting cheaper to do. So that's all technological innovation, as like Michael Saylor was talking about, is deflationary because we can do more with less. Zoom is deflationary because it means all that money that was spent on business travel, conference rooms, so on, that's now costing a fraction of what it was. So you can accomplish that productivity for $15 a month or whatever, right? So that's actually trying to deflate the economy, right, and create less consumption at the same time that the money supply is increasing. So if we get inflation, it must be so inflationary that it must cancel out the deflation and some. Does that make sense?
Yeah, I see what you're trying to make here.
Right. So, because inflation is I see that as like it's a gaseous analogy. It's like you inflate a balloon, right, it expands, and deflation is when it contracts, right? And I think market cycles, you're supposed to get that, like economic expansion and contraction, booms and busts, right? But we're in this phase where we just keep blowing air into the balloon, which is the US dollar denominated economy. You got something to say?
Yeah, and the dollar balloon is inflating right now for sure. To speak a little bit about deflation, though, and you did kind of touch on this a little bit, is that technology is deflationary. Obviously, that cost of that 1 megabyte has gone down drastically. Technology improves our lives in general, makes things easier to do. We're able to do things with less time, and hence it brings the cost down over time. As technology improves, cost of certain things goes down over time. But what that allows us to do is improve our lives. So as the cost of technology, or as technology drives the cost of certain things down, we tend to add to our lifestyle. So 40 years ago, people weren't walking around with computers in their pockets. And you didn't need that. That wasn't a cost that you needed. Now you have to buy enough. You have to get your smartphone. You have to pay your monthly contract on that. You got to have your computer at home as well.
Yep.
You got to have your Netflix subscription. Why do you have a Netflix subscription? Because Netflix made TV better. Now you have access to so many movies and shows for $10 a month. It's cheap, but we keep adding these things. Now you got Netflix, you got Hulu, you have Disney Plus. You have all these different things that technology has driven the cost down, but we keep adding to our lifestyle. So perhaps perhaps we're losing out on the benefits of the deflation that technology brings because we keep adding to our lifestyle. So perhaps we're the ones canceling out the deflation.
That's a good goal.
And then obviously the US dollar is inflating. But perhaps the dollar is not inflating so much that it's canceling out all of that deflation on its own. Perhaps we're filling in that gap.
That is another force that's acting on it. It's a good point. That is a good point. When you have more capacity, you use it. I'll just wrote down things like digital photography. Yeah, that's crashed the cost of photography. I mean, accessible to everybody. But then it's created a lot more photography as a result. So that's what you were just talking about in terms of now everyone's a photographer. Not necessarily professional, but everyone can do it now. So you don't have to get your films developed and all that stuff that we used to do, right? So I mentioned a minute ago about the US government's response to COVID and most government responses to create all this stimulus and so on. And I posed the question to myself, has that response been inflationary or deflationary? And the answer that I came to that was both, right? Yes, the currency supply was inflated. And what's the number? In 2020, something like the currency supply was increased by 40% or something, which is absolutely ridiculous.
I think the number is something like 40% of all US dollars in existence have been printed since the start of 2020.
That's mind-blowing.
It is mind-blowing if you think about it, and it should be alarming to some people.
Right. So
I don't think that stat is as well known as it should be.
Right. Well, actually, you can look it up on the trading view on the M2 money stock. It's right there, right? You can calculate it for yourself. So that's an inflation of the currency supply. But at the same time, unlike since the 1970s, when the currency supply was increasing and everyone was still engaged in economic activity, the effect of lockdowns meant that I did this video actually at the start of the lockdown. It was just a short thing about it was called economic activity is human activity. And that's absolutely true, right? GDP is people moving around, going to work, taking the bus, taking Ubers, eating at restaurants, buying sandwiches at lunchtime, doing whatever it is, visiting the casino in lunch, whatever. It's expenditure, it's consumption, right? And as soon as I heard that governments around the world, including the United Kingdom where I live, was going to go and lock down, I'm like, that's gonna crash the economy, purely based on you can't stop people moving around and it not cause economic activity to decline, because economic activity is human activity. So that's one of those, inflationary and deflationary forces happening simultaneously. You increase the currency supply dramatically, but you crash consumption because what's everyone doing? Using Zoom and watching Netflix and ordering takeouts, and so all that consumption was compressed. And there's only so much, what do you have in the US? Uber Eats, right, or Deliveroo, or this sort of stuff. There's only so much Deliveroo or food you can eat. There's only so much Netflix you can watch, right? So that even if you watched it all day long, maybe you did watch it all day long, that's still within your $15 a month Netflix subscription, right? So all the other things that you would have spent money on, you didn't. So I wonder what people did with that money. Saved it? Don't know. What do you think they did with that money that they would have otherwise spent?
Well, I think there was. I absolutely don't think people were saving the money, if that's what you mean. Some people invested the money.
Right,
some people invested the money into meme stocks. In the U.S., that's the stimulus checks went straight into meme stocks. It was just throw your stimmy check at AMC or GameStop. Now, those are things that we can prove. That's how some people spent their money. I also think that the real effect of the lockdown is that you're trapped at home. You don't have your usual expenses. So I think people threw a little bit of money into Amazon. Just let's do a little online shopping. It's the only way to get that like serotonin kick in your head. So let me just do some online shopping right now. Something will be sent to my door. So I think a lot of that. There was a lot of online shopping. There's a lot of, like you said, food delivery services. Other than that, there wasn't that much to do.
Mm-hmm.
So I think people spent their money in worse ways than they were used to. I can't. I'm neutral on the meme stock investing. Honestly, I don't really have too strong of an opinion one way or the other on that. I like the fact that more people are investing. I don't necessarily like the fact or what they're investing in or why, or their analysis as to why they're investing in those things, but that's okay. I think really that the true downfall of the spending over the last year and a half has been the small businesses, because most small businesses didn't have established e-commerce pages. And so most people ended up buying from Amazon and Walmart, and these large corporations ended up having record years, which is, I don't think that that's a good trend. But yeah, I think Amazon just had Prime Day the other day.
Mm-hmm.
And I think every Amazon Prime Day the amount of shopping volume has increased year over year, every single year they've had Prime Day, which, how much bigger can Amazon get? I don't know. But I think it comes at the expense of small business. And I think that's been the true downfall of the last year and a half. I think small businesses, I think the lockdowns perhaps were a fatal blow to small businesses here in the US, at least. I'm bearish on small business right now, which is not something I like to be.
There is another side to that, though, which is your small business could set up as an Amazon marketplace shop. So, because Amazon, it's hard to be on the product end and figure out what's the consumer trend, what will sell, and then fulfill that. So Amazon are gradually sort of extracting themselves to the technology layer, to the platform layer, where they just take a piece of the entire economy, right? I think they would rather do that. If they can just provide the warehousing, fulfillment, and the technology platform, they have no product risk. Right, that's where they're going, though, isn't it? Right? They even sell Amazon Web Services now, so that they don't even have to figure out.
I'm sure that Amazon would love to be the backbone of our delivery, our warehousing. our cloud computing, I think they'd like to be the backbone of everything. You
Right.
know, and if we want to play right into that, I think they'll be just happy to meet all those needs.
That then sort of
And they'll
becomes
make
like a
a
little
ton of
private
money in the
internet.
process.
They will make tons of money because they just get a small percentage of everything rather than, a whole
Right.
piece of a small, job.
I think more worrisome than Amazon just having record profits year over year is they're making lots and lots of money, but how much power are they taking? As they become the backbone of every different industry, whether that be deliveries, warehousing, the cloud computing is a very scary one. Thankfully, AWS does have some competitors, but we're now dependent on Amazon to run all these different aspects of our economy. That to me is what's scary. It's the power that Amazon is getting year over year that's scary to me. I could care less if Jeff Bezos is the richest person in the world. Is he the most powerful person? That's what's scary to me.
It's very true. That's a good one. That is a good one. That is a good one. That's a good one. That's sort of another topic, really.
We could talk about Amazon,
As a whole
day
rabbit
long.
hole of itself. But
It's-
speaking of Amazon, that does link back to the whole inflation deflation argument in terms of supply chains. So one of my very dearest friends owns a shipping agency. So there's with the whole government response to COVID, lockdown restrictions, etc. Supply chain disruption has become a huge thing, and at the moment, the biggest problem in the shipping industry is being able to get space on the freight ships because there's this massive backlog of product, and all the containers are in the wrong place and so on. So that was like pinching off the supply chain. So again, that would have caused deflation because it stops people from consuming, right? And that's generally how it goes. As economic activity increases, there's more demand chasing the existing goods, and then the prices rise because the free market is an auction at the end of the day. It's one massive auction, and prices rise so that whoever's prepared to pay the most for X, Y, or Z gets it, right? But when there's demand there, but the products aren't there because they're just not available because of supply chain disruption, that naturally creates deflation because the expenditure just isn't there, not because people don't want to buy it, right? So that's another deflationary aspect of the last sort of 12 months or so. I always contrast the increase in the currency supply with, I call it the velocity of money. I think that's technically what it's called. So when I say human activity is economic activity, or vice versa, it's the rate at which the dollar bill is spent. And Mike Maloney talks about this. The plumber earns his money for the day in cash. He takes an Uber, say he pays in cash. That dollar then gets spent at the gas station, right? The gas station attendant earns it as wages. They then spend it on a pizza at night. That might happen all in the same day. So that $1 becomes $7 of expenditure by the end of the day, but it's still $1. And the more transactions that $1 bill goes through, that's the velocity of money. But again, if you look at, it's actually on TradingView as well, you can look at M2 money velocity. And as the currency supply is absolutely skyrocketing, especially in the first quarter of 2020, velocity has been declining for, well, you just see the chart. And in the first quarter of 2020, it takes this massive leg down for the reasons we've already discussed, because people were locked in their homes and they couldn't consume. Therefore, velocity just took another dive off of a cliff. So that's like back to the balloon thing. The balloon just naturally wants to deflate, right? And then the currency supply thing is like constantly trying to overcompensate for the holes in the balloon, by blowing more air into it, but it always wants to deflate, right? Unless, there's real economic activity behind it. So I just find that fascinating. And why the whole point I'm making here is about the what's underneath the conversation about inflation. It feels to me all the pundits, CNBC, anchors and so on, everyone just assumes that it's one or the other. And when we end up in inflation, it's only because of the original point I made at the beginning, that the balance has been tipped in an inflationary direction, right? So that's my whole thesis on this. The question still remains, though. You've got a comment on that?
Well, what was that called? The velocity of money.
Yes.
Right. So it's trended downward this past year. Just to speak to that, I think that's a trend that's not going to stop. I have a feeling that it's going to continue to trend down and down and down. And for exactly the reasons that we've already listed today, just how people are spending their money now. And I think velocity of money is higher when you're spending that money on Main Street. So if I'm going to a small business and I'm buying a $5 sandwich for lunch, that small business owner is then supporting another small business. They're going to go buy flowers for the wife on the way home, and then that florist is going to stop at the grocery store and buy dinner when they leave home. That dollar gets reused and recycled a lot more when you're spending it in a small business, just from people to people locally, versus if I spend $5 on Amazon, Amazon's likely just going to keep that on their balance sheet until the next time they need to pay a bill.
Right.
So I would imagine that Amazon has a very low velocity of money.
You mean internally?
They're not cycling. Yeah, they're not cycling through their money as fast as small business would. So
right.
If small businesses are dying, then I would anticipate that the velocity of money is going to continue trending downward.
There's a little.
So how does that affect the economy? I don't know. I can't answer to that, but I think we'll find out.
So that velocity story with the small businesses passing the dollar bills around, that's like a cash analogy, right? Sandwich shop buys his buns from a local bakery, blah, blah, and it stays within the local, so it's the speed at which the money can move around. So longer term, the question is, does digital money, like crypto, does that help the velocity of money? Because it's like digital cash. A transaction I send to you is settled instantaneously and then can be respent, not just in your local economy, but anywhere. So it's frictionless in that way. You know what I mean? So that's...
Yeah, I think it maybe helps a little bit, but again, it just really matters where we're spending our money. Like in that small business example, it doesn't really matter if you're paying with a dollar bill or if you're paying with a credit card or if you're paying with Bitcoin. That money's still going to get recycled.
Sure.
Because you're spending locally. If you're buying your goods off Amazon with Bitcoin, I don't necessarily think that that's going to change the velocity of that Bitcoin.
It might, because with say the dollar bills finish circling around your own town, the florist that ends up with that dollar bill at the end of the day, if it were digital money, could then, at the close of business, immediately spend that internationally. Whereas if it's cash, they have to go to the bank, put it in before they can transact it. So that's a delay in how quickly that could be respent. So that's the way I see that.
Yeah, you're right. You're right. To an extent, I think it could help for sure. It's just, again, I think it is important where we're spending our money.
Mm-hmm.
And that florist is going to spend that money faster than a large business would. That's the point I'm trying to speak to.
Yeah, I'm totally with you. They'll go and buy some more flowers from the grower or whatever it happens to be. There is another side point, though, you made there about and the big tech companies all have increasing cash balances, which is to your point about, well, they're profitable, they're highly profitable, and they're very cash rich at the same time. So why is that relevant to the conversation about inflation and deflation? Well, increasing currency supply is causing Amazon, Apple, Microsoft, Google's cash balances to evaporate. This is the Michael Saylor point about they got to the point where they had $500 million of cash in the business and was like, this is rotting. This money is rotting right now. We need to do something with it. So that is that's a challenge for Amazon as well. If they're sitting on a giant pile of cash, well, if the governments continue to increase the currency supply as they are, they're going to impoverish Amazon as well. So,
right. Yeah, I'm trying to think of how that's bad for Amazon. They have $500 million of cash, or however much money they have in cash on their balance sheet. That's technically dollar bills that are out of supply, right? They're out of the circulating supply. They're not moving around. They're sitting on a balance sheet. So if Amazon were to start, say they invested in Bitcoin again, they're going to have the same benefits that MicroStrategy has. But say they were to spend that money, it could potentially increase inflation. I think you're adding money to the circulating supply, and maybe that Amazon stock goes up.
Sure.
I think they have a lot of power with that money that's sitting in their balance sheet. Again, so centralization of power here in this example with Amazon.
Well, what cash allows you to do is basically influence what gets funded and what doesn't. Right? That could be everything from charities to new business startups and so on. So that's how you would, and to your point about how it could turn out to be insidious, is you can influence the direction of society by funding certain projects and not others. And you'd only fund the projects that you are ideologically aligned with, right? So if you come along with a free energy machine, then it's probably not going to get funded, right? Not by an energy company anyway, right? Or if you come along with a decentralized marketplace idea, Amazon's probably not going to fund that, right? Or maybe they would if they could take an ownership stake in it. So
yeah,
the other final point I want to make is about part of it's not just government currency creation that it causes inflation, because that's not the only way money is created, right? We have fractional reserve banking, and the issuance of debt also creates money. So there's an inflation deflation part there. If Amazon or any tech company took some of their cash and paid down debt, any debt that's paid off is currency destruction, right? Because it's taking down the liabilities. So the way we've got to where we are is, back to velocity of money, is by people consuming and then borrowing to consume more, and then borrowing to consume more, and then borrowing to consume more. And we already knew, all things being equal, the consumer debt would hit the wall anyway, at the point where no one's just willing to lend them any more money because it just gets ridiculous. So individuals are going to get to that point, and businesses are going to get to that point, and governments are going to get to that point, which is, I think we're close, where the appetite to invest in government bonds is going to start falling off a cliff. What do you think to that?
Right. I think we've talked about that one in a previous Sunday special.
Yeah. That also might create appetite for Bitcoin. As back to Michael Saylor, he didn't see that as an option of putting his cash, couldn't keep it in cash, right? Inflation is going to get inflated away. Didn't see us putting it in bonds because they're just not sound.
Exactly. He took on debt to buy more Bitcoin.
Yes. Yeah, absolutely. Well, yes. So he's betting on inflation, because if you're in an inflationary environment, the debt you take out is a fixed amount. It's like $1 million. But then the purchasing of the value of that currency declines with inflation. So if you take the debt over a long enough period of time, take $1 million of debt over 10 years, $1 million right now might buy the average US home, say, but in 10 years' time, that might be the hourly rate of a contractor, right? Because of massive inflation. And at that time, it would take an hour's work to pay off the debt that Michael Saylor took out 10 years prior. And he's also betting not just that, but also that 10 years hence, the value of Bitcoin will be dramatically higher. So he's getting it both ways. So he's absolutely certain about that, given that the size of the risk he's put on.
Well, I think some numbers that we talked about for inflation in the past have been perhaps 5% inflation this year, if that were a thing. If you're able to get an interest rate on that loan for anything less than 5%, you're making money.
Yes, very true.
Just by your interest rate compared to inflation. So just holding on to that debt that you have, you're actually making money, which is crazy. So
that is crazy.
If over an extended period of time, inflation is high enough, and if it were to be higher than Michael Saylor's interest rate on that loan, he'd make money just from that, excluding the price of Bitcoin. So
that's very true. Mm-hmm. That made me think that's actually a strategy, because because all bets are off. All of the studious things you should do with your money have kind of gone out the window because the whole system's messed up. So you should keep the idea.
Inflation's high enough and interest rates are low enough, just take out as much debt as you can.
Well, that's it, right? So you could even do I'm not suggesting anyone does this. This is purely just hypothetical. You could take out.
That is not financial advice.
Not financial advice at all. So, I get stuff through the mail all the time. Do you want to borrow cash from your credit card? You can borrow like £10,000 at whatever it is for a 3% fee over 2 years and no interest. So that would be a 3.5% loan over 2 years. Well, we already know you could put that in stable coins and get more than 3.5% on it.
Not to mention, inflation might be higher than 3.5% over the next 2 years.
So not only do you get the profit on the difference between the borrowing and the lending rate, you also get your debt inflated away over time, which is interesting. Well, I mean, if you're earning the
you might have just stumbled in an excellent idea here.
Well, it's not quite as simple as that, because the money you're earning is fiat, so that's also devaluing. So the interest might be 10%, but the interest you earn, if I earn $1,000 of interest and hold it in dollars, that's going to inflate away as well. So it's not exactly.
I'm pretty sure you can earn your interest in Bitcoin
you could,
as well on some of these
that.
platforms.
That would actually be the smartest thing to do, I think. Borrow and then lend it, take the interest in Bitcoin or some sort of gold token or something like that, and then pay the debt off, whatever. Keep the interest in a hard asset. That's kind of another tangent altogether, but that is a good idea. That is really a good idea.
I believe BlockFi has Paxos Gold on it now.
There you go. Beautiful. That would work quite well. Yeah, that should be pretty solid. Interesting idea.
Might have to talk about that one later.
Yeah, absolutely. That's with making the DeFi courses. It's just that there are so many opportunities that you just can't keep up with them. That's one of the biggest benefits of DeFi is it's just there's like unicorns all over the place.
Right. I think that's one of the interesting things too about an inflationary economy like this, or when you have inflation as high as it is, you can look at it as a bad thing, but it also presents opportunities if you're willing to do the work. You just have to be a little bit of a contrarian.
That does rely on you accepting the way it is now rather than the way you think it is or should be. Because the way economics is supposed to work, free market mechanics, if you're still thinking that's the way it is, you won't be able to take advantage of the opportunities that are actually there. You kind of have to go into crazy world and go, okay, it's absolutely insane. I accept
you have to go against pretty much everything you've ever been taught.
Exactly.
Taking on as much debt as possible is actually the best way to increase
benefit
your wealth.
Right, that's the name of the game. That's the rules. Those are the rules of the new game. So you either play them or don't play them, So there's one final point I want to make here about the inflation-deflation balance, right? So generally speaking, right, like I said earlier, economic progress should be deflationary, right? Society moves forward, technology moves forward, advancements in technology creates deflation, right? So stuff should get better, faster, and cheaper over time, right? Assuming you had a hard money that wasn't, inflating. Yet our experience right now, because we don't have hard money, is that stuff is getting worse and more expensive, right? I call that the flywheel of consumption. Things like planned obsolescence, and it's almost like trying to artificially stimulate the velocity of money, because your vacuum cleaner only lasts a couple of years. You have to replace that. You have to replace your phone. So it's not really like our lifestyles are moving forward. That you get like a washing machine that lasts 20 years, and then you go looking for other good stuff to buy when innovative products. It's almost like you're treading water all the time, replacing
a lot of
stuff.
Things would have to change in order to have a truly deflationary economic system.
It starts with the money, though, doesn't it? That's the reason why everyone's having to make cheaper and cheaper and cheaper products. Not because they want to. I mean, it probably hurts a lot of good brands, like, I don't know, what are the classic brands like Dyson? They're trying to maintain their product quality, but you end up not being able to compete.
Right. Yeah, I never thought of that, but there would have to be a lot of change to have a truly deflationary economic system.
Right. We are at the complete opposite end of that right now. Fiat economies are focused on like short-term thinking, companies buying back their stock to push the stock price up. And ultimately, I don't know where this started, was when in the pursuit of short-term profits to publish better figures every quarter, the line item in companies' budgets that suffered the most is research and development. Like, what's the point, right? You just like reduce the budget for research development over time because you don't need to innovate, right? You just want more consumption. So, and if you do planned obsolescence,
we all lose out that way.
Everyone loses out, but it's the race to the bottom, which is what the fiat economy ultimately encourages. So
Yeah.
equal.
No, this is, I think what's so interesting about deflation to me is that we're all so used to inflation, or used to thinking about an inflationary economy, that I'm not sure if we really understand what a deflationary economy would look like. It's so far from what we have experienced so far. It's hard to wrap your mind around, I think.
Sure. I suppose that reminds me of if you lived in either ends of the extreme of a climate, like if you lived in Norway or Greenland, and then you lived in, I don't know, Nigeria. So, or if you lived in Saudi Arabia or something, that's like baking hot, like desert. And they're like, yeah, I've seen like this snowy winter thing on the TV, but don't really know what that is, right? It's not part of my experience. And on the opposite side, you've got the people in Greenland, ice cold all the time, and they're like, I've heard of this thing, somewhere, dry sand. Sounds weird, right? So it's almost like that in that we've only ever known, I mean, you and I probably in our lifetime have only ever known an inflationary economic environment. So I have no idea.
I don't know of anybody that's known a deflationary economy.
That's good call.
I don't even know if I've ever seen or read anything about what a deflationary economy would look like.
I suppose
in school, I don't think I've ever seen anything like that.
Well, people don't talk about it, do they? It's just an assumption. I suppose the only time we talk about it is things like the Great Depression, which is seen as a bad thing, right? Like to be avoided.
The only time we ever talk about deflation is to contrast inflation, even though I don't think we've ever seen a deflationary system. Right. We don't really understand what it would look like.
It's sort of like an asymmetric belief system that economic contraction is somehow a bad thing. But that would be like freaking out whenever in the fall, when the leaves fall off the trees, you'd be like, no, put them back on. You have to shed that in order to prepare for the next cycle.
Yeah. Yeah. I don't know. I think, again, like I said, I think it's really kind of hard to wrap your mind around the deflationary economy.
Yeah, it is.
Because we've been used to inflation our entire lives. We've set up our portfolios for an inflationary system, and if all of a sudden that was flipped on its head, what would happen? I don't know.
You have to reverse your whole thinking, and perhaps this is a good point. Perhaps that is one of the mental blocks people have when it comes to understanding Bitcoin, because your entire economic paradigm is inflationary, and then you get this is like yin and yang. You got the other side of it, and you're like, fixed supply. Don't know how that works, and no one knows how to make that kind of economy work, but it's happening anyway, kind of spontaneously and in the free market.
Right.
Here we go. So it does require, and then maybe that's the problem. Trying to understand Bitcoin from within the existing paradigm, you never will. It's a different paradigm, right? It's okay, you can understand inflationary fiat economies, but you need to build this whole other brand new, like almost like another hemisphere of your brain area to understand Bitcoin. So you can't even take any of your existing understanding to it. You need to reset the typewriter, and come up with a blank sheet of paper and go, right, what have we got?
Right. Maybe that's why I was able to understand Bitcoin the way I was. I didn't really have a previous understanding of finance.
Good.
And maybe that's why most traditional financial analysts shrugged off Bitcoin when they first heard about it and are just now starting to pay attention.
That's a very good point. The more
looking at it from different paradigms.
Yeah, the more deeply schooled you are in the old system, it's not impossible because there are many people who have defected from the old system to DeFi and brought all their wisdom and experience with them. But they're few and far between because it's kind of hard to change your worldview, 180 degrees like that. So some will and some won't. Maybe it'll be a generational thing. Maybe that generation will have to literally die out, and then the generation of ours and afterwards will just come into this paradigm as is, and will be the opposite, which is they'll only ever know a deflationary economy, and they'll think, well, inflation.
That would fit in with Bitcoin's S curve. A technological S curve.
Sure.
That would probably be the inflection point. There's when that generation starts dying off, and you have new generations of people that have grown up knowing nothing but Bitcoin or this new technology. And then you're going to see a rapid rise in adoption.
Mm-hmm. And that's getting ahead of the curve because you can already see that coming. So that's why I'm in the game anyway. Pretty good. Well, that was brilliant, Alex. Thanks very much again for being on the Sunday Special. I think we'll leave it there for now.
Well, thank you very much for having me again. It's always great to talk.
Okay, that's going to do it for this edition of the Weiss Crypto Sunday Special with me, your host, Chris Coney, and Alex Benfield. Until the next one, it's me, Chris Coney, saying bye for now.